What's up, guys? Welcome to ValeTalks by ValeTalks. It's a pleasure seeing you guys. Happy New Month and happy Easter. And today's Easter Monday. I hope our viewers watching from all around the world happen to enjoy their Easter holiday. And today we're going to be keeping things very simple as always. We have a new guest, two new guests, for those of us who have been following for a period of time now. We have two new faces on ValeTalks today, and I'm going to be introducing them shortly. But before that being said, I hope that you are trading in the markets, and I hope you also remember that due to the Easter holidays, the markets are going to be moving a bit slower. So you want to make sure that you are, on the right side of the market, most importantly, and you're not just gambling away. You want to always apply risk management, and most importantly, you want to be trading with ValeTalks. So moving into today's ValeTalks and live session for today, I have with me two new faces. I have with me Denis, and I have with me Syukri. But I'm going to give a proper introduction to them.
Recording in progress.
So make sure that you're paying attention and you're watching, okay? So on today's episode, we're going to be, we're just going to be chatting and really talking about the markets, right? We're going to be talking about technical analysis versus fundamental analysis. What really is the importance and the confluence between the both of them? Because we really want to get to, settle out this debate and this argument, right? And I'm your host for today, Innocent Ifere, popularly known as Rion. Okay, on today's guest, we have Syukri Asril. He's a seasoned trader and aspiring market analyst with 6+ years of experience in Forex. He trades gold and cryptocurrencies, but he specializes majorly in XAUSD, GBP/JPY, and the Euro USD. He combines technical analysis and fundamental analysis, which fits perfectly with today's episode. And I believe he's going to be, sharing a lot of insight and trying to bring balance to the both of them as someone just like myself that, combines technical analysis and fundamental analysis. And on the other end of the table today, we have Denis Mwenga. He's a global market analyst here at ValeTalks as well. And he specializes in trading Forex CFDs, having mentored thousands across Africa. He simplifies complex macro and technical analysis. So apparently today on the table between the three of us are persons who like to trade technical analysis with fundamental analysis. Yeah. So it's going to be an interesting topic, probably maybe one-sided a bit because we're all doing the same thing. So we might not have someone who challenges, just like we used to have Manesh. Manesh, pure technicals. He doesn't like fundamentals, But I believe we'll try to create a balance around it and really try to understand why it's important to have that blend or not to have the blend at all. Okay. And for me, as always, you know who I am. I don't like to introduce myself that much, but I am Rion, and I'm a market analyst in the African region. I have over 6+ years of trading experience, and I help traders escape confusion with clarity, especially teaching them about psychology and the importance of fundamentals when it comes to the financial market. But with all of this, introductions being said today, let's head straight into the discussion for today. Hi, what's up, Syukri? This is the first time we're having you on the call, so please take the table and just give us, a brief about yourself.
Okay, hi guys. Thank you so much for having me. It's been an honor to be, the first time being here. So again, my name is Syukri. I'm a new market analyst for ValeTalks. I've been around for around 2.5 months. It's like being said in the about me. Basically, I've been trading since 2019. Initially started with binary option, which is not 100% Forex. I think it's more or less 50% luck, I might say. So subsequently, I started seeing, looking for some gurus to actually help me improve further on my, on my skills. So that's when I basically learned the actual Forex in technical terms and what are the, fundamentals about Forex and the sentiment about markets and so forth. So probably I can share some insights, but not, for the past few years that I've been trading. And I'm
Yeah.
still studying. I'm still learning. We are all still learning, and I'm looking forward to share those with you guys as well. Thanks.
Thank you very much, Syukri. I have the episode overview right on the PowerPoint right now. So today, basically, we're going to be discussing about the role of technical analysis, especially for new traders and traders who are still in their intermediate stage, right? Then we're going to talk about the importance of fundamental analysis. Then the fourth thing is, do we need a confluence of both or a clarity on just one? I think that's where the major, argument is going to come from, right? But that being said, let's just, head on to technical analysis. So technical analysis basically is chart work, the understanding of prices through chart instruments. So be it candlesticks, be it line charts, be it Henkish, Roki, whatever kind of charts we're using, right? The most important thing is our ability to understand pricing on the chart. So I always say this thing at the end of my TNM market outlook, where I say charts are just the footprints of the market, right? Technical analysis is just the footprint of the market. It just basically gives you an insight to show you where prices are heading to, or where prices are coming from, or what the market basically is like if we're in a consolidation phase or we're trending, all of those things. So technical analysis is beautiful. But like Manesh would say, a lot of times traders, we over exasperate on technical analysis. Like we try to make it something too difficult. We turn it into some architectural drawings and things like that. But we're wasting so much time when we just need to understand what pricing is. Yeah. But a lot of traders, when it comes to the retail space, view technical analysis as one of the most important things in their trading. In fact, if they do not have a good looking chart, they don't feel like a trader yet. So what would we say really is a benchmark for technical analysis? Is it our ability to determine where prices would be going, or understanding what the market is really telling us? Or is it our ability to fully construct lines, trend lines, support resistance? Is that what makes technical analysis what it is, or just the ability to study price? Any one of you could go first.
Well, technical analysis, like you said, it's the study of past market data, I believe. So primarily price and volume to predict, future price and movements. So it clashes when, and when technical analysis builds on the belief that human psychology doesn't change. So it's a kind of a mixture of greed and also fear that creates the pattern, I believe. So the pattern is similar, back to back. If you see, especially for gold, for example, it's everyone's favorite. It hikes up like nobody's business for the past consecutive 5 years. If you see the daily candle even. So it's unbelievable, but it's obviously it's a safe haven for all generally investors. So I think price action is like a mantra. So everything is already in the price. So a technical trader believes that news, rumors, and fundamentals are already reflected in the charts as well. So it's like a mirror effect, even though it's climbing up, essentially, and it's still, on the bullish part. So that's my take.
Okay, and Denis.
The thing with technical analysis, it's I think technical analysis, not I think, but for a fact, the most important thing about technical analysis from my perspective is that it helps you have a rule-based approach to trading. It helps you clearly define your rules and to keep it very, very, very simple. For example, finding an entry rule, for instance. What do you need for that entry rule? For example, I need a breakout. Simple. You see, keeping it simple. I need the price to break, at a certain, above a certain swing high or below a certain swing low. And then that's going to trigger my entry criteria. So that's what I usually tell guys. So it brings a very rule-based approach, therefore a very structured approach to your trading. And on top of that, on top of that, it helps you with risk management. See,
Yeah.
it's very, very clear and straightforward. Okay, if price breaks below this swing low, for example, if I have a breakout to the downside, for example, below a swing low, then I'm going to have my stop loss at a swing
Yeah.
high.
Yeah.
Simple. Yeah, keeps things simple like that. Then I'm going to calculate how many pips are these, do my risk management. So that's really, really the power of technical analysis. Technical analysis personally gave me a lot of challenges when I was really trying to use it to predict the market. And there is nothing wrong with trying to predict, but the challenge usually is not understanding that everything is based on probabilities. Everything is based on probabilities. And before you understand that it's all about probability at first, before you come across that knowledge, across that information, you're usually looking to, I'm going to predict and I'm going to be right. Because when you look back, when you go to your chart, look back, do some back testing, you'll see a lot of instances where things panned out very well in the past. So this hindsight information or hindsight bias makes you think like the future should unfold like this. And now when you have this mentality and you are using technical analysis can tend to be, you might find yourself becoming very, very frustrated and then throwing your hands in the air and say, technical analysis doesn't work.
Yeah.
So it helps you have a very rule-based structure, and it also guides someone when it comes to risk management. That's where I respect, technical analysis a lot. Yeah.
I completely agree. I completely agree with both views. Yeah. I'm also of the belief that without technical analysis, then we probably wouldn't have retail traders. Because, in fact, without technical analysis, there wouldn't be a proper trading. Because even institutions apply rules of technical analysis. Yeah. They make it simpler on their own end because they look at prices on a wider time frame, right? So they're not necessarily having to come to their 5 minutes time frame to try to sketch trend lines and all of those things. They look at pattern recognition. So they trade history of pricing and they do that on a higher time frame. So technical analysis is a bit more straightforward for them. Yeah. So when you hear banks, the hedge funds talking about pricing, they're looking at gold. They're looking at gold at psychological levels and round numbers. They're talking 5,000, 4,500. They're not thinking 4,621 to 4,629. And all of those things. They're not thinking of prices in that nature. So at the end of the day, technical analysis can be very simplified, but just due to retail system and structure is one of the reasons why we have a lot of price chasing, right? Yeah. So we don't have as much liquidity, so we try to make the best of what we can at every time we encounter it. But now we've spoken about technical analysis. Now let's look at fundamental analysis. Yeah. There's a school of thought that believes that everything that we think happens in fundamental analysis is already priced into the market before the release of fundamentals. Do we all agree on that?
Yeah. It's fundamental analysis. If I break it into, if I were to say it's on an analogy side, it's like studying the engine of a car, that's fundamental. But like, for instance, technical analysis is like watching the speedometer of the car, how much it's running and so forth. So, yeah.
So the statement I'm making here is this, that people don't believe fundamentals shift the market. They believe fundamentals are already priced into the market and the market just reacts to it already. So there's a big argument in it. Yeah. So think of it this way, Denis and Syukri. When we have news, we usually see prices already at key areas that determine the direction of a particular release, a particular macro release. I've done a back test before and I've noticed it. So NFP doesn't just happen randomly at any point in the market. CPI doesn't happen randomly. FOMC doesn't happen randomly. We're usually at deciding points of the market. We're either at a support level or at a resistance level, or we've been in some sort of consolidation the whole week. There's always how you kind of see market pricing before fundamentals. Do you think that is the market pricing in a possible result? Or do you think that the result is already kind of understood by the market and is just waiting for the release before the market reacts to it? Or do you think the market itself and traders themselves just get skeptical when prices finally get to that level before it moves?
Actually, according to my experience, it's a mixture of both and all that you have said. Because sometimes the price action comes first prior to the news, and when the news hits, suddenly all of a sudden the price becomes somewhat stagnant, and then after a few hours it becomes active again. So in the long run or in the long game, I can see that maybe fundamentalists usually look at the big picture, because like me, I believe that eventually the market price will reflect the actual value of the asset, for example, like gold. And like for instance, now geopolitics is taking the heights. Brent is surging to 100 plus due to the Hormuz tensions. That's pure fundamental. And obviously, when you talk about when it clashes with technical fundamentals, that's when you break it down whether the price breaks, or if it's gonna go sideways. They can be. It's basically at the moment right now. What I can say is that things are very unprecedented. The macroeconomics is very residing to what the current news is, especially when Trump's utter any updated news. Very much dependent on, I can say.
Very true. So now, when we look at fundamentals, right? Denis, do you have anything to say?
Yeah. The thing with fundamentals, I tried to understand fundamentals using George Soros's framework on trading and how economics work. There is this theory, we used to call it the theory, it's still called the theory of reflexivity in markets. And I was even referring to it and looking it up slightly. So according to Soros, market participants' perceptions, they influence prices, and those prices in turn influence perceptions. So this is something that we tend to see all the time when it comes to fundamentals. What do market participants believe? You see, what do market participants believe about, for instance, the macroeconomic situation of a country? What do the participants believe? And this belief tends to do what? To influence prices. These beliefs or perceptions, they tend to influence prices. And when they influence prices, that's when we can see sometimes we have bubbles, we have price trends. Price trends keep on going on and on and on. It can be bearish markets, bullish markets, because of a certain perception that investors have about macroeconomic fundamentals, until it reaches a point whereby these perceptions are no longer in line with reality. Okay, sometimes you can see, you usually hear this phrase, people say, everything is working so well on Wall Street. So we have this class of people who make a lot of money in Wall Street. But when you look at Main Street, people are not doing well. The economy is not doing so well. I believe we have come across this, all of us. But people in the stock market, they're making money, and but people on Main Street, they're not making money. So there is this speculative bubble that keeps on growing. At some point, there is a misalignment between perceptions of investors and the reality on the ground. And then that's when we have bubbles bursting. And this is also the reason as to why we need technical analysis, because technical analysis can help us get out of the market early in advance, can help us detect when, reality and perception, there is a mismatch between reality and perception. So, That's what I think about. I think this theory of reflexivity really explains the relationship between the two, perceptions versus reality, and at what point are we going to have the two split so that the markets can return back to, I guess, equilibrium. I think the role that traders usually play in the market is sometimes bring perceptions and reality in unity.
Yeah.
when we are over speculating and the market crashes, and then some traders of course make money out of it, some don't make money out of it, but there is a way that trading really brings the two together. So yeah, that's a very reasonable, I'll say, place to start analyzing these two things, fundamentals and technicals. Where do they differ? Where does perception and reality, where do they differ? And yeah, that's essentially how I see it.
I like the theory of you just stated.
Reflexivity.
Yeah, yeah. It also brings us back to you know of game theory, right?
Yeah, game theory.
Yeah. Yeah. When you apply it, you also see that people have an issue with making up their minds. So they usually make their minds based off what other people's decisions are. And that's the perception you're talking about, and reality, right? It's almost similar. But the thing here I'm trying to really put to this is people are always confused about how to trade fundamental analysis, which is one of the things they want to know the most. How do I trade fundamental analysis? They know the reports, they know everything. So the question now is, how can they finally get that confidence to confluence the both of them? Now we've moved into the third thing on our overview for today. Is there a need for a confluence, and how do they confluence fundamentals and technical analysis?
Yes.
Or do they just need clarity? Or do they just need clarity on one end? Because there are people who tell you that technical analysis gives them everything they need. And there are people who really want to trade fundamental analysis, but now they need to understand how to confluence that with the technical analysis. So that brings me back to the point where I mentioned earlier on, where I stated and I said, do we agree that fundamentals are usually priced into the chart already before they are released? Because when we see releases about to happen, the markets on the charts are always in very strategic positions. So let's take gold, for instance. There was a time in 2022, every time before there was a particular news, you could easily tell the direction gold was going to head to, because gold was always stuck in a pattern. Would always find gold in a ranging pattern. Either if it was going to go bullish, we'll find gold in a bullish flag, or we'll find gold in a falling wedge, or if it's going to go bearish, we'll find gold in a bearish flag, or all of those things. So you could easily tell how fundamentals was going to affect the price direction of gold by just understanding the consolidation that happens days before the news and the direction in which the market is overall. And then there are times where news could actually start a change in a trend, where we'll find prices in a key support level or in a key resistance level. So the argument is, if I can see this on the chart before the fundamentals as a technical analyst, why do I still have to bother myself with the fundamentals if I can clearly see that market is in a bearish trend and I am currently identifying a bearish flag or a bearish continuation pattern? Why do I have to bother myself with the news when I can still enter my trade based off my technical biases and be right?
So Syukri, you want to go ahead?
It's basically it's an animosity when it comes to the clash of both, right? But for me, whether you are a chartist or a news junkie, the very fundamentals, basic is to use fundamentals to determine the direction, whether the the direction is going to be buy or sell. And back to the main not the main topic, but the main sentiment of geopolitics right now, especially when we talk about energy, gold. These sentiments play a very focal or major role in the direction, because sometimes, like what you said, the movement of the market is not similar at the moment compared to like 2022. Though you see the chart is moving upwards, but the trend, even a 1 minute candle trend can represent as if it's like an H1 movement, because it drops and it hikes up like 500 to 1,000 pips like nobody's business. So fundamentals tell you what should happen, and technicals tell you what is happening. So for me, I will never argue with the screen, even though sometimes I might have my direction might be wrong. Like for example, fundamental analysis tells me that oil will rise because of the war, but technicals say hang in there. We have to wait for a breakout above the key support or the key resistance before I start buying. So when it clashes, so you have to be concise and be wise on what do you call that, going into such entry. So we have to be very prudent in that case. That's my take on that.
I think it was
Syukri saying.
Go ahead.
Oh yeah, I was saying, like, to add to what he's saying, like, technicals are very good at timing, right? Fundamentals can really give you a hint as to the next possible direction. For example, all other factors being held constant. Let's say you're trading foreign exchange and all other factors being held constant. I believe the purpose of fundamentals, that is macroeconomic reports, for instance, is to help you understand. They can help you have an insight of what's going on in the mind of central bankers. Okay, central bankers, the guys who control interest rates, they determine the cost of borrowing. There is a certain data set that they follow, that they track. So I'm saying, like, if you get in their minds, and trying to see, okay, this is the kind of data set that they're following in order to take interest rates in this particular direction. Then the next thing I would want to do is look at price and see, does price confirm this? Will I get good timing? If I'm looking at this entire data set and I'm like, okay, these guys are probably thinking about hiking interest rates. Okay, these other guys are probably thinking about not hiking interest rates. So when I compare the two countries, the currencies of the two countries, does it reflect that? All other factors being held constant, like let's say geopolitics and all that, all other factors being held constant. So fundamentals can be very, very, very important in helping you understand possible direction. And then technicals come in helping you understand timing. And I guess sometimes that's why you might look at the charts, and then when you look at the technicals, and technicals, I'm talking about technicals on the daily time frame, weekly time frames, nothing like on the 1 hour and all that. So the longer kind of longer term time frames can help you understand, okay, fine, these guys want to hike interest rates. How should this asset behave? What is that swing high that we need to break? What is that swing low that we need to break? Okay, right now I'm looking at a situation, maybe the market is in a consolidation. Does this reflect a form of confusion, macroeconomically or fundamentally speaking? If you look at the dollar index right now, for example, you'll see this major, this consolidation happening, showing, uncertainty. Are investors certain that, hey, we're going to use the dollar is going to serve as a safe haven, or is it gold, or how is it gonna play out? So that's the beauty of technicals, seeing all that, seeing all these things, seeing the confusion, seeing the clarity, and then once you have your fundamentals in order, you can say, well, I am coming up with this conclusion. Most likely central bankers are going to hike interest rates. Let me wait and see whether technicals will confirm this. Or if technicals do not confirm that, then the opposite is true, and such. Yeah, so.
I would have to agree. I'd have to agree entirely with both of you, right? Um, Syukri said something where he said he wants fundamentals to tell him where the market should be going to, and he needs technical analysis to show him where the market is going to. So he kind of simplified it in a way that makes it very interesting. So fundamentals should give you an idea of where the market is supposed to be going to, but then now you need something to follow through. So it's like you've been given a promise about a destination, but now you also need a system that gets you to the destination. So the promise is fundamentals. Technical analysis then shows him to hold on his faith and trust in the destination. So if that doesn't work, then he knows something is wrong. So now there's a mismatch. Now that becomes the clash between your perception and reality. Dennis, that becomes the clash between your perception and reality. Now that's what pulls us into a consolidation in the market.
Correct.
Yeah. So the same thing. And he said something that I was going to kind of I was going to extra quote. And I believe what he said about being prudent comes from Mark Howard when he quoted Warren Buffett. When Buffett said the less prudent people are in their affairs, the more prudent we have to be in our own affairs, right? So that's one of the things that keeps us, one of the things that keeps you apart in the market. And is one of the things that shapes your ability to discern between the perception of people and the reality of the market. So the importance of the confluence between fundamental analysis and technical analysis is what puts you at an edge as a trader who understands the both of them. So another thing I think we haven't really touched in this conversation here is when we're talking about fundamental analysis, we also need to come to break it down into the two parts of them that they are. So we have what we call, like Syukri said, unprecedented, but I like to call them geopolitic data, and then we have macro data. So these two fundamentals apply to the market differently. Macro data are very much predictable. When I mean predictable, you have an idea of how the market would react to them. But when we now look at data that are more geopolitics and fiscal, it's now a bit dicey because now you really need to brace yourself to how the arm or the independent arm of the sovereignty or a country is going to place itself with what the government itself is doing, where the whole geopolitics happen. So on a normal instance, we know safe havens, gold should be buying. But now we're seeing a whole different scenario. So that's where the full understanding and in-depth nature of fully, exalting fundamentals as a person becomes well known in you. If you really are just trading CPI, greater is better than previous is good for currency, or you fully truly understand what fundamentals are, right? So a lot of retail traders don't really pay attention to fundamentals as the geopolitics, the fiscal policies by the government and how, monetary policy now has to create that balance to it and all of those things. They don't really understand that. What they do understand is macro releases. They understand CPI, they understand NFP, they understand PPI, they understand FOMC. Even FOMC, a lot of people don't truly understand FOMC. They just understand the interest rate decision. Nobody pays attention to the FOMC speech by Powell. Because if they did, then they would understand that his speech could invalidate the results from the interest rate decision. Things like that. So I think people need to get to a point where they don't just think of macro releases when we talk about fundamentals, but also understand the in-depth of fundamentals to a point. So mentors would need to get to a point where they are explaining these things to them and giving them different scenarios. Nobody expects a black swan event, but when you understand how black swan events affect the markets, then you know how to play with your technical analysis. So I believe macro releases is where a bulk of traders think about fundamentals from, and that is where their major concern are if we're going to be discussing to retailers. So it then brings us back to the topic of confluence. How can they really confluence their technical analysis to these macro releases? How do they blend it to actually see that it works for them? Syukri.
How how do they actually confluence on both technical and also fundamental?
Yeah, on trading on red folder days, high impact news days. How do they confluence that?
Okay. For me, the truth is both fundamental and also technical analysis, they are solving different problems.
Yeah.
I totally agree on what you have elaborated just now, because fundamental analysis uh, obviously helps you decide what to invest in, and technical analysis is more on helping you decide when to act upon it.
Yeah.
So basically you'll notice something interesting in the market, because some pairs like gold and oil, they hike up, and vice versa,
Yeah.
recently. And sometimes bad news, like news that suddenly explode, pushes the prices up. So uh, that's because the market doesn't move based on facts alone. It also moves based on expectations on what people see or foresee
Yeah.
on the current situation. Yeah.
Okay. So, Denis.
Oh yeah, how they can use the tool. It's just as Shukriya said, they serve a different purpose. So, for example, during red folder days, for instance, understanding the macro data from the perspective of what is the market expecting, what was the previous number, maybe a particular data point, what did we previously have, what is the market expecting going forward, trying to position yourself to see, okay, if we have a bullish reaction, where will my ideal entry point be? Where will my ideal exit point be? Now, when you're talking about entries and exits, you're talking technicals. You're talking purely technicals. But even before the news release, you already had a fundamental thesis going into the news release. You already have an idea that given the prior macroeconomic data that has been coming out, let's say it's for the euro, for example, it might have shown that the euro is in a good position, or Europe is in a good position economically speaking. Okay, so the chances are high that if we have, let's say, a data point coming out and forecasts look very positive, chances are high that the number that is going to be released is going to be a very positive number. So in other words, you have an idea. You're not just making a judgment from just one data point. See, you have studied a series of data releases. You've studied a series of data releases, and the technicals now will come in when the releases are out, and you can be able to now determine, entries and exits and manage risk. I think that's the best way that a trader, a novice trader, or even an experienced trader can bring the two, have that confluence and make judgments and good decisions from that.
Because I was wanted to finish up. Like when I even started combining fundamentals and macro context, things would thoroughly change, because I wasn't just reacting anymore. You have a reason behind those decisions. Like success in the market isn't just about being right all the time about the direction. It's also about managing your risk and being consistent, because at the end of the day, the market will only reward discipline more than your intelligence. Because you don't need to know everything. You just need a system where you can actually stick to.
I think I would have to put that down somewhere. The market rewards discipline, not your intelligence. And the sad part about it is, as a retail trader, a lot of times we think the market rewards our intelligence. It's why we have traders with charts looking so beautiful. They know where the liquidity is. We know where the liquidity is. We know where to draw the trend lines. We know where the support is. We know where the
The 45 degrees and everything.
Yeah, we know the PDRAs, we know the shift in market structure, the break. We have all those things, and you see people with very beautiful charts, but yet no money. No profit.
Ironically,
yeah.
Ironically. So that really stems, and I hope people watching thus far really get that. And if this is the first time you're coming on this ValeTalks, please don't forget to hit that like button, click the subscribe button, turn on post notifications so you'll be notified on when we have next episodes. This so far is episode 16 of the ValeTalks. Means that we've had 16 weeks of ValeTalks progressively, and we've not halted since we started. So make sure to always tune in and enjoy, and don't forget to trade with ValeTalks as always. So before we close for the day, because it's Easter Monday, Denis still has a few things to catch up with his girlfriend. I probably would want to get to the gym and come back home and sleep. I don't know what Syukri might be doing, but it's holiday in our own region. I don't know about Syukri. But
we're in Malaysia. We're in Malaysia. We have actually finished our Eid al-Fitr holidays, and right now we're on a working mode. For another 4 days, and
and that's good.
That's it.
So before we close out for today, right? I just want to ask a question. Do you think a trader can be successful by just trading technical analysis?
I think you still have to blend with a mixture of both. You cannot just stay one-sidedly because both factors are equally important, because most traders, or even like beginners, especially when they just blindly enter price following some CFUs in TikToks and so forth, they fail because they have a big lack of risk management. They just blindly follow their gurus when they told to sell. They blindly click on that sell button or buy button without any proper money management. They risk too much on one trade, and actually they are chasing losses. And obviously with one-sided technical or fundamental side, you will eventually trade with just emotional basis, and I think the losing end will be more prone to a trader instead of compared to both analysis.
Okay, Denis, how about you?
That's a trick question, Rion. That's a trick question. Look,
it's a very tricky question, and that's why I asked. Because there are people watching currently asking that question.
I see.
I think it depends. It really depends. It depends with how rule based someone is. Do you have the ability to not need an explanation? The ability to not need an explanation, and do you really appreciate deeply that sometimes, and it can be most of the times, winning in trading is purely based on probabilities. If I'm approaching technicals from the perspective of probabilities, that means I'll be very effective when it comes to managing risk. And there are so many stories out there of traders and big traders, hedge fund kind of operators who have done very well for themselves using technicals. Yeah. But when you look at their models, their execution is excellent. Their risk management is just excellent. It's not, okay, I've lost a series of 3 trades or 4 trades, so I'm going to change everything. No, I'm going to stick to this. So you find, let's say if you look at annual performance, you find some years the fund is up, some years the fund is down. They didn't change anything. Say, okay, this year our fund is down, our performance is down, so we're going to change everything. No, they are able to stomach the losses, and knowing that, hey, we are managing our risk very efficiently, and doing that on and on without questioning. So It really depends with your emotional makeup. It really depends with the system that you're. Are you a systems thinker, purely a systems thinker? And are you going to be able to manage your risk around that system? Are you going to say, okay, fine, I have made this month, I've not performed so well. So what? Okay, I'm just going to continue applying the rules as they are because I have tested, I have seen eventually in the long run, I will be profitable. Now, the thing with macroeconomic players, like guys who really focus, let's say they are trading more than 50% of their decision making hinges on fundamentals, whether it be geopolitical or macroeconomic. You find some of these guys, they take huge bets, really, really huge bets. Like when you see all the geopolitical issues that are going on, prices of oil are going to go up because of these macro factors, fundamental. They take huge bets. Compared to guys who are purely technical. Guys who are purely technical, they'll try to balance their risk. They'll try to say, I'm going to stick to that 2% throughout and throughout and throughout and throughout. I'm going to stick to that 2% throughout. But you find these macro players, guy comes in, there's a very big geopolitical, macroeconomic story going on and say, you know what, I'm going to risk like even 30% of the portfolio on this. So it really depends with how someone is wired. But yeah, it is possible. It is possible. Yeah.
I like right or wrong, I guess. How you put it. I love how you put it, right? There's no right or wrong. And why the question is asked is, I've heard people ask me the question, but why do I really need to know fundamentals when the chart tells me everything I need? And I love how Denis put it. You need to understand your person, where your emotional framework is at, right? And I think it is Solomon in the Bible. I think in Ecclesiastes where he mentioned that too much knowledge depresses a man. And I think one of the reasons why all of us on this call here is we fell in love with trading not just because of trading. When we started to understand the influence of how the markets work, it became very more interesting. So fundamentals became something you couldn't avoid. Now you want to know what's moving the market. You want to know what the decision of the Fed is like. You want to know if the economy is in a recession. Now you're studying a lot of data. We just fell in love with fundamentals for what it was, not because of trading. We became wowed that, so this is what really affects the prices of these things, and now we're interested in it. But trust me, there are people who never have to think of a macro report. Like I said, retail traders, when they think fundamentals, they are thinking macro reports. Now, there are a lot of traders that don't want to bother themselves with macro reports. But in terms of basic financial market news or things that could affect the financial markets, they have an idea of it because they watch the news, they watch BBC, they watch CNBC, they come across those things. There's always a high news alert on their Twitter feed or something that tells them that. But for macro releases, they usually wouldn't bother themselves with it. So when they see that there's a lot of uncertainty in the market, disciplined enough as they are as technical traders to stay away till they find balance in the market. Or if at all they decide to take a trade, like Denis said, their emotional framework that manages their psychology and risk is always in check. So it is possible. So for those of you who are watching this live and are asking that question, if it's possible, it is highly, highly possible. I tell it to you for free. You can take it to the bank and use it to withdraw some cash. It's going to be accepted. You can trade technical analysis and trade technical analysis to a point where you are very much profitable. But it is also important that you have an understanding. No one is asking you to make it a base of your trading approach or trading system, but an understanding, because no knowledge is wasted, and a jag of all trade is often better than a jag of one. You get? Yeah. So it is good that you have an understanding of how fundamentals influences the market, so you're not caught off guard being a technical trader. And that's just the whole essence of why we believe that it's important to have a confluence and a balance amidst your technical trading. And I want to say a big shout out and thank you guys for those of you watching on Facebook, on YouTube, because we're streaming on all platforms right now. Thank you so much for coming today and watching our live today. And until next time on ValeTalks, I want to say would love to see you and would love to hear from you. So always leave your questions on these videos, even if you come back to watch them, and we'll be answering these questions on a dedicated Q&A session for questions asked on ValeTalks, those who watched after it. And would love to see you on the next episode on ValeTalks. So with that being said, I want to say thank you so much, Syukri, for joining ValeTalks today. Thank you so much, Denis. And I would see you guys next week, Monday. Hopefully, we'll have Manesh. It will be 4 of us, or probably even 5 of us if Kaza is available. Until then, enjoy the rest of your Easter Monday and have a continuous working day, Syukri.
Thank you so much. Thanks for having me, guys. Have a productive day.
Thank you, guys.
Take care, guys.
You too.
Thank you.
Bye, guys.
Bye now. Peace out.
Bye.